Hi, everyone. Just before we get going, I want to remind you that everything we talk about and discuss should not be considered as investment advice. The purpose of what we talk about on Catherine Murray Media and Markets on YouTube, as well as Catherine Murray in Conversation With on my podcast, should be viewed as informational and entertainment purposes only. Please definitely do your own research, your own homework, and definitely consult an investment professional before making any investment decisions. And also to note, some of us might hold positions in some of the stocks that we discuss. Hi, everyone. Just wanted to set the stage a little bit here before we get going with my interview with Rafi Tahmazian, senior PM at Canoe Financial, very well respected energy investor. And, you know, we had planned to speak this week and bring you this conversation just to kind of get the lay of the land for the energy industry globally. And then, of course, some, investment thoughts, how he approaches investing in energy. And then, of course, we got hit with the Texas deep freeze, which really just plays into his overall thesis that we absolutely will continue to need base load energy, and that what we're seeing, tragically in many ways, in Texas is the lack of having that as a supply for the electricity grid. A lot there, but let's get started with the conversation. I think you'll enjoy it and learn a lot. All right, Rafi, great to be with you. This is kind of such a fun forum to have, and for our viewers, I know that they know exactly who you are, but you're senior portfolio manager at Canoe Financial, and also, of course, a veteran energy investor. And there's obviously just so much focus actually on the energy sector this week because of what we're seeing in Texas, the deep freeze, and of course, this rolling over to 14 states as well in terms of power outages. But why don't we start in terms of stepping back, because this is something that you've talked a lot about over a while as it relates to concerns surrounding supply disruptions. So why don't you kind of step back and give us a little bit of a big picture thinking, and then we'll get into some of the the current news that's driving oil.
Yeah, what happened this week is it's a milestone that people should understand is going to reshape how people think about energy. And our job is to try to predict where the market is moving. And what happened this week is going to create a movement in the market. And we'll talk about that for sure coming up. That's very important. But I think to understand what's happening today, it's really important for people to understand what has been happening. And dating back, you've talked to me several times over the last year, and we tried to make people understand, really, by August, we had a picture that we were comfortable that the rebalancing of the power of the supply of oil was shifting back into OPEC's hands again. For the first time since pre-08, the market was now going to be being controlled by a cartel as opposed to a free market. And that was courtesy of really lower oil prices, mainly collapsing the shale play in the US, but also, and low oil prices collapsing the super majors capital spending back in 2015. But also the negative energy movement, conventional energy movement, has forced people to divest of energy, forcing banks to not lend, and all of this aggressive movement to try to curtail supply. And I've always said that, the anti-fossil fuel movement that has grown over the last 15 years had two enemies it could go after. It could either go after the consumer or the producer. And when they went to say, well, who's my enemy if I'm going after the consumer, they go, well, that's everybody. So that's a pretty big enemy to attack. But if I go after the producer, that's just dirty oil companies. And so, someone I know in one of your questions earlier asked about the relationship between energy and cigarettes. And we're going to talk about that. And I think that's an excellent question because they're very different. But this anti-energy movement, which is embraced now even politically within Canada too, has been a huge impact in preventing our ability to grow supply. And then this picture emerged in the media around this great world that we're living in, and we're all doing good things, and they take pictures of windmills and solar panels and say, and call it clean and mystify people thinking we're using less energy. We're actually using dramatically more. But that was misled. And a good way to mislead people is to try to focus on what's happening in our backyard. And in the developed world, which is less than half the world's population, way less than half the world's population, we are using a very stable amount of oil. We're not using more or less. But the developing world is on a magical, aggressive trajectory. Why? Well, 1 billion of those people don't even have electricity yet. And you've got a whole middle class that is developing. And when I say a middle class, you go, well, what's the importance of a middle class? Well, middle class means you don't have a scooter, you want a car. And in fact, you want 2 cars eventually. And you want to have in-house heating, and you don't want to have an outhouse anymore. You want to have plumbing inside. And all of these things are not going to be developed by windmills and solar panels. And so the demand for oil is growing dramatically. Every week we're seeing new data indicating it's actually, we're not pinning the demand high enough. Mm-hmm. The IEA came out as recently now and is openly stating that demand is far exceeding their expectations. Conversely, in the same week, Total came out on the supply side and said, look, we're doing everything we can to work towards a greener solution for how we produce energy. But we got to say, we see a deficit in supply by 2025 of 10 billion barrels a day. That is like energy crisis level, if that's the case.
So, Rafi, it's interesting that we're talking about perhaps the supply energy crisis in 2025, but we're also certainly seeing some evidence of that as it relates to perhaps what we're witnessing in Texas, but also the blackouts that you've talked about, and also some of the extreme high electric costs out of Europe as well. So, maybe give us a little bit of a backdrop in terms of how that's relating to today.
Yeah. So, I mean, look, you have to look at all of these things. What happened in Europe, what happened in California earlier this year, and has been happening in California in prior years because they already started this movement to this variable energy source. And then what happened in southern states now is I had one of my assistants put up I wanted to write an article this weekend, and I said, can you get me a couple of comments this week where journalists use climate change as the problem, was the issue. And she said, well, how many do you want? I mean, there was just a ton of people who said climate change.
It's everywhere.
Climate change.
Yeah.
Climate change was not the problem this week. The solutions that they were creating for their problem is the problem. Their solutions is this variable energy, which is wind power and solar, that is bolted onto these old grids. And those things failed, among other things. Now, what you also want is your base reliable source to turn on, available to you at all times. That is, people have become more aware of the importance of that now, which means the importance of the basic fossil fuels are going to become that much more in need. And another way to look at this is really based on how we are being sold this whole gig too, right? And I think people have to start to question whether that we're being pitched an idea without really understanding the implications of it.
So let's talk a little bit about this. And first, in terms of some of the media and journalists out there that are saying that, that I guess what they're saying is that the extreme weather in Texas and elsewhere is because of the dramatic impact that energy and fossil fuels has had on the environment. That's the argument, right? And maybe they're right and maybe they're wrong. But the point is too, though, Rafi, you tell me this, is that there's been such a buy-in to all these alternative sources, or as you say, variable sources of energy, that when push comes to shove, when there is a situation like we're facing right now, that they're not able to meet the electricity demand, correct?
Correct. Like, let's set aside the debate about whether climate change is the dramatic climate change is man-made or not. The point I'm trying to make is someone has said man-made climate change is threatening our existence, and we want to do something about it. And the way to do something about it is get off fossil fuels. And they've chosen this path that they call it renewable energy. I call it alternative energy because it's not renewable. It's also because it depreciates and destroys itself too. It's also dirty to create, and I think not all the truths about it are. But so the reliability about it is a problem too.
Right. So there's a lot there that doesn't get talked a lot about, Rafi. So let's kind of break it down, because the great thing about this format is you and I actually have time to have these kind of conversations. So, when you talk about it being dirty, these, the renewable sources, but as you say, they're alternative. Think about the windmills. What kind of energy does it take to create them and make them? And what happens? What is their lifespan?
Yeah. So remember, I think, I'm not exactly sure of the number, but if you look at the total energy that globally that solar and wind provide globally, I think it runs somewhere around 1.8% of global energy, okay? If you take those solar and wind and run them fully utilized all day and all night, like you could run an oil generator or a gas generator, you would have 25% of the global energy made. So that's great. That would be super. So you have to build out all of these huge solar fields, all of these massive fields of windmills that have these huge blades that are not biodegradable. And after, when they're not broken and they finally do run out of their life, which I think runs 20 years, they throw them in a ditch and bury them. But remember, what did we accomplish with it? Virtually nothing. 1.8% of the energy when you had to build out enough for the equivalent of 25% of the global energy. That ratio makes this stupidly inefficient and inappropriate. So to use this as the second coming is not right. And I think I start to envision, even this week, even more now, I see the importance of the reliance on fossil fuels and actually possibly nuclear becoming a much more important power in representing how we are going to become a cleaner environment in terms of how we provide for our electrons.
But Rafi, that's the big question, really, in terms of, you see it developing that way. Perhaps all of the millions of people that do not have a reliable source of energy and electricity see it that way. But of course, will the policymakers see it that way?
Yeah, the policymakers of late have been elected and were created, I think, under this movement of anti-fossil fuels, and I'm talking about it globally, and because of the capitalist system is run where you have to you don't get to push your policies unless you get elected. So how are you going to get people elected? You're going to tell them things they want to hear, and I think that the nature of this type of politics is dangerous. And this week is a great example of people need to start saying, wait a minute, you're telling me that this world's going to be something beautiful in 2050. And I always use the words, blue sky and sunflower seeds and windmills everywhere. And it's all going to be beautiful and birds chirping. And by the way, it was 2030, and then 5 years ago it became 2050, and no one said anything about why it just moved 20 years. Why are we not making the politicians accountable for how we're going to get there?
Meaning what?
This week was a good example of it. People need to recognize that a lot of the hardship that they're going through this week in southern US is because of this move that we're trying to make away from hydrocarbons. There is going to be times where, as this disruptions come, and because we're choosing this variable energy as a source, which I don't think will survive, we are going to have to see periods of time when, we have power outages and we have death and carnage, and we are going to have very unsavory situations, and it may even in some cases lead to wars. And so geopolitical imbalances that will develop from how people interpret what's important power and what isn't anymore. Look at the power Saudi carries, that little nation, that because of the sheer size of the oil reserve that they have. So if someone else can tap another form of energy and be able to provide it, it could be a very powerful thing, but that hasn't happened to this point. So we're trying to disrupt a very basic system that no one wants, or the media have made people think we don't want. And now we're proving that we're maybe going at it too fast. And and people need to be aware that there are prices we are going to pay if we're going to get to this thing that these politicians are pushing us towards to 2050. And by the way, I'm not even bringing up the balance sheets of the government that are going to be required to do this. And what really are we going to accomplish? We better start asking, what are you going to accomplish from this, really?
Right. And it's interesting. I don't want to get too far into the weeds in terms of some of the stocks and the valuations, but in your most recent commentary to your shareholders, and full disclosure, I mean, I own your funds, and very thankful that I do. So, but you're talking about the shift to alternatives is creating its own crisis. And when you take a look at the valuations of some of these alternative or renewable companies, I wrote it down because it was so astonishing, but they're trading at anywhere from 24 to 95 times EV to EBITDA. And we should describe what that means, because for a C&Q, for example, I think that trades at 5 times. These other companies are trading at, again, 24 to 95 times, and it's because I believe the amount of debt that they have. So, you tell me. But
I'll give you even one more important thing. Like I was kind of raised on pretty basic rules of investing. One of them being try to stick to companies that are good at creating cash, not at burning it. And one of those companies on that, I think, spreadsheet you were referring to was a company called Enphase Energy. This thing's trading at 80 some odd times EV to EBITDA. Its free cash flow yield is 0.8. Okay, Canadian.
So they make no money. They make no money. They make no cash.
Free cash flow yield on CNRL, 14%.
Right.
Okay? ARC before the 7 Gens deal, 16%. So these are powerful businesses. And by the way, ARC was trading at 4.2 times.
Yeah. And you're getting a dividend. And you're getting a dividend, 5.5% for some of these companies.
Ballard Power isn't going to generate EBITDA until 2023. And it's got an 11.5 billion market cap. Sorry, it's probably about 10 billion today because they high watermarked their equity issue earlier in the week. But and then you've got Tourmaline, the largest gas producer in Canada. It's going to generate probably 1.5 billion in cash flow this year, and it traded, I think, the same market cap.
Wow.
So something's wrong. There's a bubble there, and people need to be wary of it.
So, Rafi, I want to pick up on a couple of items that you mentioned, which are quite interesting, that I think people are going to listen to and say, wait a second, what does that really mean? When you say that there's a shift of power going on that could even potentially create a war, I know that's not, literal per se, but what are you thinking about when you think about the power that has shifted back to a cartel? What are you thinking about as it relates to the shale players? And this is one of the questions as well we got in terms of whether or not they can just, start producing right away again and therefore help with the supply situation, which is at the end of the day what we're talking about. Right now we're seeing pressure on the supply side of the equation, and we're just even, at some point we'll see a reopening of the broader economy. So then imagine what it might look like. Like what are your views right now on those fronts?
So yeah, you said two kind of important things. That from a perspective of, look, I have to be, and I do approach my investing in a very philosophical perspective. I always like to refer to it as I'm the top-down guy, and Dave is coming up from the bottom, and we try to meet in the subsector range. And you have to realize, like, energy and ability to produce energy is going to create power for you. And if we create a energy crisis here, then the powers that are going to have access the energy for us to use are going to be in the hands of these dissident nations, these non-complying nations, and that's dangerous to me. And so we need to be able to control our own fate, and I think that comes by immediately starting to qualify whose oil is good oil and whose oil is bad oil. And you grade it by two things. Number one, what do you do with your revenue when you generate your oil in your country? Meaning, what is your human rights track record? And when you produce that oil, how do you do it on an ESG level? Environment, social, and governance standards. And Canada, every day, all day, we will put our oil and our gas up against every barrel in the world. And at some point, when people start to realize fossil fuels don't have a terminal value to them, they are going to be very important in our lives, as we saw this week, that we should actually now be saying at a United Nations level, what oil we should grade the quality of oil based on those parameters. And right. The world should be penalized for using the dirty oil and clean oil. That's how you prevent the power shifting into the wrong hands.
So in terms of the word dirty oil, of course, those words have been used so often as relates to Canada. And you so often have come on, on air with me previously and talked about all of the developments with new technology that has made Canada perhaps much better than anybody really hears or listens to versus other producers in the world. So give us an update on that front, please.
I mean, we have the oil sands production, and that oil creates a footprint that it has an environmental issue that I would argue needs to be corrected. And to be relative to the production and the process on a percentage basis of emissions relative to the rest of the industry, it's a bigger part of it. So but it's all being categorized together. And that's dangerous to me. I think the oil sands should be under its own category of debate and scrutiny around how it attacks its issues. And it's not just emissions, it's environmental, how it approaches. But what you're going to find is they're going to be able to reciprocate fairly strongly about how they are fixing those things and where they've come from and where they're going. On a percentage basis, our emissions relative to Canadian emissions and Canadian emissions relative to global emissions, we are a pimple on a rhino's butt. And it just doesn't matter. And what I fear is every barrel that we are forced to not produce, does that mean we're not producing that globally? Someone else is producing it. Someone with a worse track record with human rights, someone with a worse track record on ESG. And so I think actually our government's movement against our industry and our inability to produce more oil has been a negative impact on the environment because they've allowed other parties to produce that we know by our standards are better. So they actually had a reverse effect than what they wanted. They need to start supporting our industry instead of vilifying it, putting it on a pedestal and demanding that G7 and G20 countries start having to grade the crude they use and pay penalties for using that ugly oil.
And I think it's important, when you bring up human rights records that, Canadians should know, and some do, and many don't because they just perhaps haven't followed the industry, that we import oil on the East Coast from some of these countries.
To what degree?
Nigeria.
Tell us.
So I don't know the exact numbers today. I think what maybe is even more shocking is maybe so we all know about the pipeline east that got scrapped because Quebec decided, we like the money that you give us, but we don't like the pipeline that it is needed for it. And that was a very offensive thing for Albertans to hear. And it's created a barrier that we need to try to bring down. And I don't see any communication between the provinces, and that's disturbing to me. But what did that create? The first transfer of oil from the West Coast to the East Coast of recent came via a ship that went down the West Coast through the canal, Panama Canal, and back up through the Gulf and around and down the St. Lawrence Seaway into the Irving facilities. Now, how much CO2 emissions were emitted to get that oil to the market versus what we would have had with a pipeline, right?
Across your own country.
Ridiculous, right? We have oil coming from Nigeria. We have oil coming from Saudi. I don't know all the nations, and I don't know the exact amount, but we can provide for all of the oil that is imported and then some, if we were able to bring it to the market in our own country, and we don't do that.
Rafi, I want us to get to some of your investment thoughts, and also we got a lot of great questions as well. But I first want to, with all of that said, and seeing what's been going on in Texas and 14 states affected, and the lack of CapEx spending over the past number of years, which has curbed supply. Where do you see it, perhaps over the next year, in terms of the supply side of the equation? Because at the same time, too, what are we thinking about Saudi Arabia perhaps increasing production, and also the potential for Iran? How does that factor into your thing? Those are two key variables that are probably pretty hard to gauge and calculate correctly.
So you're asking a few questions there again. So first thing is, cutbacks were happening in Canada for the last several years. Cutbacks were happening in the super majors for the last several years. But there was a massive expansion and growth in the shale in the US. And they grew by, in that period when we were contracting and the super majors were contracting, the US grew from 10 million barrels to almost 14 million barrels of production. And they were materially having an impact on the market to make it much more of a free market. And so derivatives traders were creating this volatility in oil. The crisis, the COVID crisis, created the drop in oil prices that killed that high cost, high decline production. The US production is massively declining. So to maintain the production level, they had to drill more and more and more wells. Eventually it was going to blow up on them anyway, but this COVID accelerated it. It happened very fast. They lost 3 million barrels instantly. We think up until this recent disaster this week, they were probably producing about 11 million barrels. The key question in your comment would be, what price of oil starts to bring oil production back to a growing percentage? I would say most of the industry still has the wound hasn't even scabbed yet. So they're not ready to get aggressive. They don't have the freedom to do it in the US. There's still an industry of consolidation, of panic and desperation because of the leverage and the term debt that's coming due on some of these businesses. So they're going to have to there's still a big cleanup going on there. Canada is an extremely clean market financially, the businesses. And this meltdown and recovery now has only accentuated the beauty of the industry. There are businesses that are clearly not marked for survival. The banks are choosing to withdraw their lines more and more.
In Canada or the States?
In Canada. One of my neighbors was over the other day telling me, yeah, we've been complying every month. And every month we pay down more debt, and and we comply completely, and then they say, yep, thank you, we're going to take your debt down more now and more. And I think at some point these producers are going to go, listen, I'm not going to take down the debt anymore because I'm complying. So if you want to reduce my debt, then you've got to put me into insolvency. Because a lot of the banks didn't want to take on the role of having to administer these things, and they're making the managements administer their own insolvency, if you will. So I think there could be a rebellion there. That's a whole other story.
Yeah.
Yeah, but what you really need, remember, $60 oil is not necessarily a good thing. What you need to know is, what is the outlook for oil? Because a producer might drill the well now. Take a Montney well or a Duvernay well. It's $7.5 million. You get really good results. It's a 500-600 barrel a day well. It declines aggressively in the first year, second year, not as much, third, fourth, and it tails out. Your payout is 3 years. Okay, so I need this price outlook for 3 years before I get a rate of return.
Okay.
You got to be able to see the longevity out there to make the investment. And at this point, we're just not seeing the back end and the comfort and the confidence. I'm telling you, it's coming. I feel very comfortable that we can't stop this price rise. And to your point about, now you brought up Saudi and Iran, we need that production desperately.
Wow.
There's 7 million barrels of excess capacity and in OPEC. And I think that you will highly likely, in status quo environment today, you will need that oil in the market by the middle of this year.
So on that front, how much of a risk do you see in terms of, and I think you use these words in our, kind of pre-interview, or how we always talk, but of an energy crisis. I mean, or do we not really need to worry about that, because we will in fact see these producers come online?
No, I think ultimately there is a very real scenario of, I don't think we can fix the supply problem relative to the demand quick enough that we won't see oil get out of hand. And I haven't done enough work on it, and maybe some of your listeners are smarter than me on this too, but what is $80, $90, or $100 oil mean to an economy?
Right.
Runs off of a big part of the cost of doing business, and an input cost is energy. And what does that mean? When an airplane can't fly without double the cost to the fuel, it's going to end up with a more expensive airline tickets. So if you're not flying, what does that do to the economy? It has the ability to derail the economy. So, we look for scuds that could derail this crazy market that's been going on.
Mm-hmm.
I think that one of them people should assess is the cost of energy and basic goods in this new world we're trying to grow.
And do you think that with what we're talking about today in terms of the supply issue, that might reopen the conversation in terms of Keystone XL?
Yeah, I don't think Keystone XL is completely dead yet.
Oh.
That's a good, I'm not convinced it's dead, because I'm not convinced that I still believe there will be an awakening and an understanding of the importance of fossil fuels in this transition. I still believe that what that will also create will be, and with the proper governments in power, asking the right questions and accomplishing the right means to attend to the issues, meaning not just here's where we're going to be, but here's all the things we got to do to get there, and be open and honest and accountable for how we spend money and what we're doing, and making people prepared for the implications of what we want to achieve.
Yeah.
I feel like, we are going to realize the importance, and our heavy oil relative to Venezuela and Mexico is very powerful and important, I think, to the Gulf refineries. And ultimately, that economy may be able to win and reopen address the Keystone XL. In the meantime, yeah, it's not happening. So,
yeah. Rafi, let me get to some of the questions and then we'll wrap it up with your investment thoughts, because you certainly do sound bullish, correct? You're bullish on the energy outlook.
You know, I don't ever go out of my way and say, now I want to be bullish or now I want to be bearish. I try and just talk about what I'm thinking about. And It's so funny. In August, I was out talking aggressively, what I thought was aggressive, and people were just hearing me talk. And then by October, November, we were talking about getting out of the U.S. We got to push back into Canada. I was on your show talking about it, and you need to get here. And the base of the thing is building, and it's stronger, and people need to get on board. And I started hearing people come back at me going, "You sound enthusiastic and excited." And I'm like, okay, well, that's good. If they can read that tone in me, then I'm glad. I'm not doing that. I'm not selling people on that. It's just, that's my excitement.
Yeah. Well, yeah, right. And for anybody who's a new viewer to us and a listener, this is going to be in a podcast as well. You know, you as a money manager have the ability to invest where you want. And many years ago, you absolutely moved out of Canada and were investing in the United States. And it was so interesting when you moved back into Canada. And of course, so many of the valuations of these companies were down 80% or so. So, you know, you've had a, you know, it's recognizing what's really going on and making the moves that you can do. But you definitely did sound a lot more positive than I've heard over the past number of years as we talk about policies that have been so against Canada's energy industry. But let me get to a couple of questions. One of them is, could you ask Rafi his thoughts on the comparison some investors are making in between the energy sector to the tobacco sector?
Yeah.
Can these companies adopt a similar strategy and outperform as well? How can we be sure that CEOs will not waste this $60 WTI cash windfall on production growth, or even worse, as somebody else's comments, very low return in wind, solar, hydrogen projects for ESG points like BP and Shell are doing?
Yeah, there are a lot of answers there. Let me get a water here quick.
Okay, I'm going to pause it. I'm going to pause for a second here. So I just undid the pause button. So what are your thoughts in terms of the comparison between tobacco and energy?
Okay, so first of all, tobacco and energy. Tobacco is a luxury, and it was killing people. Energy, fossil fuels are not a luxury. They're a necessity. And this week was up until this week, I was telling people we need it or we create death and carnage. You take tobacco away and it's supposed to create life, right? So you can't think of them the same way. They're not the same. This idea that oil is bad and yet we still use it. Tobacco was bad and we tried to get people to stop using it, and it didn't create carnage. It didn't create, you know, a lack of basic needs and goods that we need. Oil is sifting through that system, and we can't take it away. So they aren't a fair comparison. You shouldn't think of them in the same way.
Okay. Are you concerned, though, that we will see companies kind of waste the $60 oil price?
What you worry about? So I think there's an enormous discipline we are getting, and I can give people comfort talking to CEOs dating even back to last year, Q2 in the US market and Canadian oil companies. There is a sense of understanding of variable distributions and regular distributions and slowing down the decline rates and becoming, in the Canadian industry, it coincides with the nature of our basin. As a Canadian investor, you can feel comfortable that the sector is not going to be driven off of growth in volume. They're going to go through this massive consolidation. We're in the middle of it right now. You're going to get 15 or 20 companies that represent the vast majority of the production in this country, ranging from 100 to 500, 600, 700 barrel a day companies, 700,000 barrel a day companies. And they will be, the larger you get, the cheaper you can produce the widget and produce it and send it to the system. Manufacturing, not exploration anymore or exploitation. So I'm very comfortable with that discipline.
Okay. Todd is asking, what's the latest on Headwater exploration? HWX is the ticker there. Believed it was one of your top picks a couple of months ago. That's one of his questions. The other is how you view, we talked a lot about this, the supply deficit compared to other commodities. Do you think that oil will be more undersupplied relative to copper, lithium in the next year or two? Is oil the commodity super cycle leader?
I'm not intelligent enough, working backwards in your questions, I'm not intelligent enough to tell you whether it be the super cycle leader, but I think that I was just talking to, my head PM at Equities, Rob Taylor, today about, we are in Canada, we have access to all of those things from a mining perspective and a resource, and Canada should be able to take advantage of this commodity super cycle, if you will. Will oil be a huge part of it? The other ones are driven off of infrastructure spending that governments are doing, which is unprecedented, and we don't know to the extent that that will have. We have a much more better understanding of how people use oil and where it's going to get used and the pace that it's growing, the demand. We understand supply based on capital spending, and we see that deficit happening very quickly. The one unknown that could really shake this up is airline travel. How quickly will the rest of the world, Canada won't be doing it very fast, but how will the rest of the world get back on track with airlines this spring? Because there's 6-7 million barrels of supply to come back on up to that from that sector alone.
Okay. And HWX, Headwater
maintains it. We still maintain it's. We started buying it at the equity issue. We were invited in at 90 cents. We were supporting the company in the market, building a position up to $1.30, $1.40 before they announced the deal with Cenovus. Cenovus took back stock in the company, and good on them, because the company's now trading $3.40 a share. And I would tell you today, the company looks as cheap as the day they did the Cenovus deal at $1.40. They can't spend the cash. They had $80 million of cash. They can't spend that cash at the pace they wanted to. So their cash is not coming down because their cash flow is growing so fast. So they are in the Clearwater. The Clearwater, I think, is ranked maybe the 4th most profitable play in North America. So there are a handful of companies. Tamarack just did an acquisition in there. It's mostly owned privately through Spur and another little company, Crestline. It's hidden inside Canadian Natural Resources a bit. Otherwise, you have to play it through Headwater as a pure play and in the public market. And I would highly recommend people be exposed to that today.
Okay. We've got Justin from Nova Scotia asking, and this is a follow-up that I kind of wanted to ask you a little bit about as well. And it goes back to the supply side and all the power that the shale players, the U.S. shale players have had. So the question is, Rafi's thoughts on U.S. shale growth and how that will impact the supply-demand balance. Are we still at a point, we kind of talked about this and you kind of gave us your thoughts, but where the U.S. drillers can turn the taps on to easily meet recovering demand? Have capital budgets actually changed enough to prevent supply growth?
No, that is not understanding the dynamic of a shale play. If you understand it, it is we used to, when I was a kid and I'd go on wells rigs with my dad, we would drill and we would go through the shale to find the oil below, because the shale was a plug and the oil would be below and you'd want to hit that. So you'd hit the Rex member or whatever it was, anticipating the shale. And if you saw the shale, then you knew that the oil was not leaking out. Now, over 100 million years, that oil below does saturate into that shale. And so you always knew the shale carried the resource in it, but it's tight. And so now you drill horizontally through that shale. That's what we're doing. And we're fracking it all the way along. 3 miles of that shale is drilled. But the initial oil around the wellbore comes out, and then it gets harder to get more and more. So your decline rate falls super quick. So for oil companies to go back up to 3 more million barrels of production in the US that they lost, they would have to drill 3-4 times the pace they were drilling back before March. It's not even financially, let alone physically conceivable to do. It's going to take a mammoth amount of, just because of the nature of that oil being a high decline oil. So once you start to understand the dynamics of that, you'll realize you can't just turn taps on or start drilling again. It'll take massive capital commitment.
Got a question from Jason who's asking, where do you see, and this is interesting, just maybe to wrap it up, we didn't get to everybody's questions, but we're going to be continuing these conversations, Rafi, but given everything that we kind of just talked about today, and investors should know, or listeners should know, that you do invest in alternative energy on the storage front. So this conversation is not about oil is great, you love oil, and you don't love anything else or respect anything else in the alternative world. That's not it. Like you invest in these, and I've invested in them with you.
That's right.
So we'll get to that in just one second. But this question is, where do you actually see oil in 30 years?
In 30 years?
Yeah.
That's unfair. That's not even medium term. That's long term. I actually see it being recognized as a very important part of the infrastructure, and I do believe that we're going to have to prevent. I think we're going to see incredible technology around energy storage for these variable energy methods of wind and solar that are going to lift their efficiency relative to the size you have to build them. And we recognize that, and as you said, that's why we've positioned funding around bulk storage. But I think that we will start to recognize the importance of the scale of what is dirty and what is not in fossil fuels. Coal is very dirty, not metallurgic coal, but the conventional heating coal. Oil, certain types of oil are dirtier than others. Let's make sure we are getting off that. Natural gas is an extremely powerful transition product. Nuclear is going to become a very important part of this process, I think. And I actually feel quite disappointed now. Really, it's obvious that if all that energy and effort to dispel hydrocarbons and push capital and mindset around these weak variable energy sources was instead focused on nuclear, today I think we'd be a much happier society.
Wow.
Today, yeah, it's really too bad.
Okay. Rafi, I think we've gotten a lot of aspects in terms of your views and where you stand and where you're focused and putting money to work. But just lastly, maybe give us, and besides Headwater, maybe another top stock or kind of how you're positioning the portfolio.
Well, look, I'll give people some fun stuff. I mean, look, we've got, obviously, there's the intermediate sectors, and we always try to trade in the best names in the sector. So, in the Montney producers and in Duvernay, we're focused on things like Paramount and Kelp. But let's think about maybe the service sector. I'm trying to position money in front of where the market's going to go. We think that with these stronger balance sheets, producers are going to expand their capital spending, albeit marginally, and it has very little effect on supply, but there is absolutely a decimated service sector out there. And if they increase their spending as a producer at all, there is no services available. So whatever is out there is going to have pricing power. So position yourself in those names that have it. And the best one, I can't see any better, because they've got cash on the balance sheet, they've been buying their own stock back, and they are a healthy business with barriers to entry, is Trican on the pumping side. So keep an eye on that one.
Okay.
I'll make another kind of a fun one maybe to look at is a company called Pipestone. It's about a 20,000 barrel a day producer, and it's in a play that I think is going to get a lot of attention in the consolidation world here over the next 6 months. And so it might be viewed as a vulnerable takeout, but you're talking about a company trading at 2.5 times EV to EBITDA, and it's maybe the third or fourth most prolific play in North America.
Wow. Rafi, you haven't told me about that yet. I didn't know about that.
So this thing looks like it's up sharply from 70 cents to $1.40. Don't be alarmed by that. It's
okay.
Again, remember, you know what? People need to realize these stocks are up sharply, But oil went from 35 to 60 in that period of time too.
Yeah.
And gas prices have gone up dramatically. So the cash flows are up and companies are paying down their debt and actually becoming much cleaner businesses on the other end. Not only are they as cheap as they were 5 months ago, but they're cleaner balance sheets too, because they're getting cash flow and cleaning up their balance. So I would watch those as really fun kind of plays in your portfolio for sure.
Okay. Rafi, amazing to have this time with you. For our viewers, our listeners who've been listening to you with me for years now, it's great that we can kind of delve in so deep to the industry.
And and we're not rushed by a clock or a commercial, right?
Yeah. There's no hard out.
or interrupted by a politician who's speaking. Yeah.
Right. That would happen. Okay. All right, Rafi, thank you so much. That, of course, is Rafi Tahmazian, Senior Portfolio Manager at Canoe Financial, energy veteran industry investor here in Canada and well known as well in North America now, and perhaps even some global clients, I'm sure.
Yeah, we've dabbled in it a little bit, and we think that Canada is a great place to try to encourage investment. We think Canadians should be looking at their own industries, and like Australia, we're going to get a lot of attention because of the natural resources base. And so, watch the Canadian dollar. It's a very powerful time right now in terms of the issues around inflation and what the U.S. is going to do with their rate, what's Canada going to do with our rate, but how does the world view us from an economics perspective because of our natural resource? We're so rich in it. Canadians should be investing in Canada right now. And all indications of money flow is that we've been doing the opposite. And I'm saying, look back in your own backyard in spite of how, I think of what our government is doing with our economy. I think it could work in spite of that.
Oh, well, that's saying a lot. Rafi, we'll leave it on that note. Great to see you.
Thanks for the support too. I appreciate it, Catherine. This was fun.
Thank you so much.
All right.
Same here. Okay.
Bye-bye.
Bye.